Hello, everyone. Welcome to the market update for Tuesday, May the 17th. As always, if you have any questions during the week that I don't get to in the class, or if there's any in the class that I failed to answer, sometimes I don't see them, then you can send those to jerry@traderspro.com. All right. Let's get started. There's a couple things. Last class we did on Thursday, I was talking about kind of the conditions changing a little bit in the market. I've been talking about waiting for this panic sell-off to take place, but what we started to see is it. Now we're still continuing to see it. The market having days where the S&P goes down and the VIX goes down. And what I talked about last Thursday was the possibility of what could be causing that these big institutional traders they've bought their protected puts. So once they do that, once they're covered, they don't mind their stocks dropping because the losses they're taking on their stocks going down is made up by the puts going up in value, and so that's not going to create any panic selling on their part because they're not concerned. Now you have to understand with options, they have an expiration date, and when they buy those protected puts, they do have to pay for them. So there's a cost to buy that protection, and so there's a dynamic there that they're not going to spend that money on those protected puts if they feel like they don't need them. So knowing that typically people will hedge their positions nearer term, out a week or two, maybe 3 weeks, depending on they're going to gauge it based on how long they think the selling could take place. What needs to happen then in order to get back to a condition where you could get that panic selling is you either need time to go by where those current options are going to expire. They need to either sell them or they need to exercise them or what have you. And then they got to make a decision. Do they buy more? Or you get a market rally where, again, they're either going to exit those put positions or they're going to the rally is going to cause them to feel like the bottom is in and they can start buying, and they don't need to spend the money on hedging themselves again or buying that protection, particularly if those put options expire worthless, where they paid that money for that protection, they didn't need it. It introduces another dynamic because it puts pressure on them not to repeat that again, because if they keep buying that protection, yes, they have it, but they're spending money on that. That means that any market rally, they're not profiting on the rally because they're just making up for the money they spent on buying the protection. So I like that dynamic because it's like a chess game. You've got to it's not a simple decision just to go buy protective puts. When you understand that there's a calculation there that there's a reward to risk that they've got to weigh. It just introduced a whole new dynamic into the market, and it's what could set up that panic selling that could still end up taking place. So, having said all that, the expectation is that either we're either going to rally up, maybe something similar to what happened in March. Bottom line, I still think we go lower, but we could have a week or two where we rally up, alleviate that oversold condition, and then roll over and sell off, and then have those, again, a time period where those options expire. Or we could see it move more sideways and just kind of move back and forth a little bit for a few days or a couple weeks to again, time to go by to where those institutional traders have to make that decision again to hedge. So in the meantime, I think that we could see some really weird moves taking place. You may not see the kind of the normal market flow that you usually see, or trend that you usually see. It can whipsaw a little bit. I would expect to see a little bit of that. Now, to get started here on the update, one thing I also pointed out last update, we're right here on the bull market, bear market, longer term signal. And I said, don't be surprised if the market sells off again, that we're going to move into bear market territory. And we've officially moved into that bear market territory, which is significant, again, coming from the area we're at. Extreme bull market conditions that we had seen for a few years. And it took a long time, a lot of selling to just barely start to move into that bear market area there. Now that is a sign that we are probably getting closer to a bottom now that we're in this condition here, and we're starting to move pretty quickly into this condition to where we get a panic sell-off. We're probably going to get over here we could easily get to that far side of that bear market, and that would be another indication that we're very close to a bottom. Again, we can't pick perfect bottoms, but you especially in this type of trading where you're looking to be in your trades for a few weeks or so at a time. You're letting these trends develop. You want to ride these trends. We don't have to pick the bottom perfectly to be able to profit nicely from it. But we're starting to get there. And again, really all we need to see, in my opinion, is to get that flush out sell off that so often accompanies these bear markets and these pullbacks in the indexes. So, and I'll definitely point it out when I feel like we're seeing some of those conditions. But I want to point that out here, that we moved into that bear market territory. The momentum indicator is we were in kind of the extreme range. We had a little bit of a market rally that's pushed us into the sell range. What this tells us is we could still, we're in a position here where we're not extremely oversold to where we could start moving lower. And that's another thing. I'm not suggesting that. My theory about the institutional traders and protected puts I just talked about doesn't mean that that's exactly what's going on. I can't know exactly what those people are doing. It's just based on how I'm reading the VIX and my understanding of the VIX and what the VIX is calculating. It's just a theory that I have. It doesn't mean that we couldn't roll over right here and suddenly get panic selling. Maybe all those big institutional traders, their protected puts expired last Friday, and they're not covered right now. And I don't know those specifics, and so it's definitely possible we could just roll over and start selling off and get into a panic mode right from here. We don't have to have a rally for a week or two before getting that, but this is telling us that that's definitely possible. We're not in an extreme oversold condition. We could move in that direction from where we're at right here. It also could mean that we do get a rally and see this really alleviate that oversold condition if we were to kind of rally. I'll show you the candles. The candles are showing mixed signals for the last couple of days. When we get to the S&P chart, I'll show you what I'm talking about. And then Brett, same thing. We're in that high range, but we're not in the extreme oversold range. So the same type of dynamic as the momentum indicator there. And then the market sentiment is still high. Again, this is still a little bit concerning that we're not getting that. There's no fear showing up in the market yet. And so that's why, for those people that keep thinking that this is the bottom or the bottom is in, they just don't understand how bottoms typically form. There's just no fear. The problem with not having any fear behind the selling is that you can't trust the rally. I mean, it means that and that's what happened in March. If you remember going back to March, we rallied pretty strong in March, and I got to the point where I was wondering, maybe this is the one time where you aren't going to get a panic sell-off. Maybe we are going to go to new all-time highs again, and before, and maybe we're not in the big correction yet. That it's coming still. So that can it you can't start to think that way. I can understand how, if the market was rallying really strong, you have to recognize what's going on. And, you also know the market's not rational. Sometimes it can make the lower probability move or do something that you haven't seen before. And so it's part of the dynamic that makes this job pretty interesting, is that there are things that happen repetitively over and over in the markets. And then there's erratic things that happen that always keep us on our toes. So, and that's, again, this is what I talk about all the time. You have to embrace it. You have to embrace the fact that you can't know exactly what the market's going to do. You start to think you can, and the market will throw you a curve that you haven't seen before and make you look pretty foolish. All right, so let's get to the charts here. Oh, wait. Let's go back to the buy-sell ratios here. We're starting to see, what I'm starting to see here is we're seeing a lot of stocks going from sell to hold. Notice how this dropped pretty dramatically. So with the rally over the last couple of days, most of that was stocks going from sell to hold, back to hold. Didn't see a whole lot going from hold to buy. Now that'll change if we do rally up for a few more days. You'll see this start to jump. We'll see both these start to jump, and you can come together pretty quickly when seeing a lot of stocks going from hold to buy and a lot of stocks going from sell to hold. You'll see these coming close together. But we did alleviate that extreme. This was an extreme condition. And you remember what I talked about on Thursday? I said a lot of this was pointing to we should get some sort of a rally just to alleviate that oversold condition a little bit. We were due to get at least a little bit of a bounce based on being at these extreme levels, and that's why we look at it is so that we're not we're not jumping in and or know that in this case we know that there might be some things we can jump into and take advantage of if we rally up for a few days there. And I did. I got into a couple things on the portfolio that I'll go over here with you in just a second. Sentiment indicator is got close to that extreme level, but it's backed off it a little bit. It's showing you what the other indicators are showing you, which is that this has alleviated that oversold condition a little bit. If we did roll over and sell off, this could push it back into that extreme level again. But there's also room. We're pretty far away from being overbought, so you could get a rally for a few days and see this indicator move up closer to that overbought range there. All right, let's take a look at the S&P chart. So on Thursday last week, what we were looking at was this. It looked like we were getting a little bit of a bullish reversal, although it ended up being more of an indecision candle with you had the tail on the top and bottom of that candle. We had an intraday low down here, intraday high up here. Relatively small body, not a real compact body that would really indicate indecision, but enough there to say, this wasn't a strong bullish reversal signal. But when you combine it with the oversold conditions that we were seeing, and the fact that the market was going down, the VIX was going down, that's more of a bullish signal when you see that the market going down, the VIX going down. We saw that yesterday again, that dynamic. I'll show it when we look at the VIX here in just a second. So we got the rally on Friday here, and then I was expecting a continuation of that. I thought, in fact, when we opened on Monday, we opened halfway into that candle. So we gapped down a little bit, but that's exactly what happened back here. Here was your bullish reverse. This is back in March. We went on that big run. We had the bullish reversal day here. We gapped up the next day and moved higher. So we had kind of the bullish reversal here. We gapped up the next day and moved higher. And then the day after that, you opened halfway down into that previous candle. So you gapped down the next day, and then it rallied into the close to close at the highs of the day. So it looked like that's exactly what we were getting yesterday. We opened midway in the candle. We rallied up to go higher right here, but then we faded, and it ended up forming a little bit more of an indecision candle. But that's what happened through here is you gap down. So you had a weak open, and then buyers came, pushed it higher, had another weak open the next day, and then pushed it higher. And I thought maybe we could see some of that, and we didn't. So, that again, this gets back to, you expect that maybe the market's going to behave like it did in the past sometimes, and it just doesn't always behave the way you expect it to behave. So we had indecision candle yesterday. We moved higher today, but this is the problem I'm running into now. Is that we talked about how there's a possibility we could see the market rally, but with that indecision candle yesterday, and then today is actually a little bit of a bearish. It's kind of forming what we call a hanging man candle formation. This is actually a fairly bearish price action in the context here. We've already rallied up a little bit, so you want to have an upward move already in place. You have a gap up, and then it sold off. So we sold off after we gapped up this morning, and then buyers were able to push it back up, but we're right back where we opened the day. They can't get it to go higher. And this is reflecting here is it's reflecting buyer exhaustion. The buyers aren't strong enough. And again, it could change. We have another hour and a half before the market closes. Maybe we see a strong rally into the close that could change that. But as of right now, it's showing a little bit of buyer exhaustion or lack of buying. There hasn't been a whole lot of buying, and this could just be short covering that's taking place. People getting out of their bearish positions, that they're short the stock. In order to close out those positions, they got to buy the stock back. They sold it first. They borrowed the shares from the broker. They sold those shares first, and then they've got to buy those shares back so they can give them back to the shares back to the broker. That's how you can make money on markets going down. But they have to buy back those shares, and sometimes that's what can create those bounces within the downtrend. Is it's short covering. Now, people sometimes will claim that a rally isn't strong because it's just a short covering rally, but in reality, every downtrend that reverses into an uptrend starts with a short covering rally. The first thing that happens is the short sellers decide that it's gone down far enough, it's too risky to hold on, that maybe there's some bullish things that they're seeing in the market. So they buy to cover their position. They buy to get out of their position. It causes a bounce in the market. And then the other buyers, the real buyers come in and they push it higher from there. So that's always the question is it just a short covering rally that's it? There's no new buyers coming in to push it higher? Because that could lead to it rolling over and dropping again, and those short sellers jumping right back in again and piling in on the sell side. And we just don't know right now because, again, we got indecision yesterday. We're getting a little bit of a bearish kind of hanging man formation. We're bumping into resistance right in through here. Remember, this is that corridor that was so important. The buyers came in on this day, remember, in this zone right here. They pushed the market up right there. They pushed it up right here. They pushed it up right here and right here. This was the low point of that, and we're bumping up against that right here. So yeah, I think it's significant that we're seeing a little bit of that buying exhaustion right at this critical area. And again, I'm not looking at the exact area, but I'm looking at a zone or a range right here. And so we'll have to see how that ends up playing out. But this is one of those critical areas here. Either we're going to break either the market. By the way, when it's showing these bearish candles, it doesn't mean that they always will work. Otherwise, I'd be a gazillionaire and I'd never lose money in my life. you just trade those candles all the time. But so it could be that buyers do end up showing up and we break out above this range, and that would be very bullish if we can break out above this range, shake off this kind of bearish looking candle today. So tomorrow's going to be pretty important, because it could roll over and we could see a bearish reversal day that could maybe be leading to another move down, and maybe that starts to slip us into that panic selling. But remember, a couple of weeks ago, I kept talking about this range. We were talking about how important this range was, and I said, boy, if we break that range, we're going to see panic. Well, we broke it, and we didn't see panic selling. In fact, just the opposite. We saw the VIX, we saw the market going down and the VIX going down. In fact, just complete opposite of panic. It was complacency. It was like no big deal. And that's why I was, it was becoming less and less probable that we were going to see a massive sell-off here that we would probably do for a bounce. All right, so that's what we're looking at with the S&P. Now, keep in mind too, I talked about how, we still have further that we could drop to this, going back to the beginning of the COVID sell-off, or the end of the COVID sell-off, beginning of the run-up that started this uptrend. We're not even at 50% retracement of that move. 50% is down here around 350. Again, you could look at this and say, well, Jerry, isn't that a bullish ABC pattern right there? And that's a possibility that, again, that the correction could be done. But again, I get back to just the lack of that panic sell-off here at the bottom that you would want to see. We just haven't seen that. So to me, it looks like it's just another head fake, and then we'll move down into that range. You'll still have what will look like a bullish ABC pattern at that point. But now, again, at some point, you start to get up closer to this range up in here, you've got to assume at that point that maybe that is the correction. Maybe it is done. I'm not going to get so locked into this expectation that we've got to drop that I'm going to ignore the trend or ignore what is actually happening. I think this is really important as traders. There's a Wall Street phrase that says you can either be right or you can make money. Now, obviously, you can be right and make money. I'm not suggesting that you can't be right about your trade and make money with your trade. But what that phrase is designed to point out is that people very often get their ego involved, and it comes a point where they're more focused on being right than they are with making money. And you got to ask yourself this. I've trained a lot of traders over the years, and I can tell the ones that are going to really struggle when somebody, the number one thing they tell me about is how they were able to brag to their friends that stock was good. They knew that stock was going to go up, or they're bragging to me all the time. I told you that was going to work. I told you that stock was going to go up. Then I can tell that their ego is involved in their satisfaction of trading isn't so much about the money. It's trying to prove how smart they are to everybody else that they called it. Now the funny thing is you never hear from those people when they're wrong, right? they never text you or call you when they're wrong. They only do it when they're right, and so there's another motivation there. And that motivation will get you into trouble, because when you need to stop out of that trade and cut your loss, keep your losses small, you don't do it because that means you have to admit you're wrong, and you can't go text your buddies and tell them how smart you are, right? So then you end up taking a huge loss, hoping that it'll turn around, that you'll save face and be able to still brag about it. And usually that leads to losing a lot of money. And so you got to check your ego at the door and say, okay, I'm going to be wrong. It's okay to be wrong. And just be careful. Again, I ask you that if you're finding yourself doing that, that is a character trait that you're going to need to overcome to be successful in trading. If you And what I would do if your main purpose is to be right, then don't trade the stock. Okay, don't put money into it. Just tell everybody that you thought that company was going to go up in value, and then if it does, you can brag to them. And then when it doesn't, you don't brag to them, but you don't lose any money because you're not in a trade. So if that's your main purpose in life is to be able to be right, tell people you're right, then I would say don't trade it. Don't put money into the trade then, because you're going to have problems down the road. And I think a good example of this is Kathy Wood's ARC Innovation Fund. And we're short it in the portfolio. There's a reason why we're short it. Those stocks keep trending down, and it's causing our portfolio to go up in value. But she locked into these stocks. She got it right early in that bull market from a few years ago. Stocks like Square and Tesla and or the big ones that she's been short. Teladoc was one. Teladoc and Zoom. This is the future with the pandemic, and she was right on a lot of those calls. She got a lot of attention. But then what happened is she locked into those companies. Some of them weren't making money, and some of them, obviously, when the pandemic was over, they didn't need nobody wants to really be on Zoom if they don't have to. They'd rather have the face-to-face relationship if they can have it. She started to get hammered, and these stocks started to drop. And what did she do? She just dug in and kept saying, they're going to turn around. I'm going to be right on this. You'll see. And I think she's a good example of someone that is falling into that trap of wanting so desperately to be right that she's willing to let that account just get destroyed, so that eventually, and she's hoping eventually they will go back up and she can say, yes, I was right. But man, think of the years that could go by before that happens, and all the money she could have made in other areas that were trending up, just so she could eventually, maybe 5 years from now, say, see, I told you so, So you got to be able to check your ego at the door. Don't get so focused on being right that you mistrend. And the whole point of that is what I was just showing you here. If we do start trending up, I've been talking about this panic sell-off. Many of you have been around for a while. You know that I have no problem saying, oh, I was wrong on that. Well, I was wrong on the panic selling below this area right here. We didn't get it when we broke below here. And instead of finding reasons why I'm still right, I'm recognizing that, hey, maybe we rally right here because of it, and maybe we can take advantage of that. Although it's looking more and more, see that candle's looking a little bit more bearish again, starting to come back down again, and still looking pretty bearish there. But let's move on now. The other indexes are pretty much showing the same thing. Let's get into bonds. Now, bonds last Thursday looked like we could maybe be reversing the trend. We got a couple of bullish engulfing candles, and it was looking a little bit more impulsive on the way up, but we needed to get above this area. Like I said, that was the previous lower high. We went to a lower low. We need to get up above there to really be the first signal of a trend reversal. And look, we didn't get that. We immediately rolled right back over. And I pointed that out too. I said, it's looking like something's going on right here, but we really do need to get above here to really have something as far as a trend reversal. If we roll over right here, you just got another lower high, and you're probably going to head to another lower low. And that's what's looking like it's going on. Now, there's another possibility here. You did get a lower high right here. You did get a lower low right here. Maybe we do bounce right here and rally up, and it gives us a higher low. This is the next lower high right here, so it wouldn't take us very much to go break to a higher high. So I mean, so as of right now, we're still in the downtrend in bonds. That's what I would be looking for to at least show the possibility that it's reversing back into an uptrend. Get a higher low right in here somewhere, break out above here to give you a higher high. We'll see if that plays out. Obviously we could still end up going right to a lower low and continue that downtrend. We'll see what happens on Thursday. We might have a better idea of that. If we get all the way back down to that low, it's probably going to break through it. It's much more likely it'll break through it. It's possible you could get a double bottom and then move up, but depends on how we trade into this low right here. You might, if we see a little bit of a bullish reversal candle right in this area, that would be a sign that maybe you get a double bottom right there, and maybe it rallies up from that. But we'll probably have a little more idea of what's going on there on Thursday. Gold, gold had a bullish reversal, a little bit of a bullish reversal right into here. I've talked about this possibility. This is a bullish ABC pattern right here, although it's a very deep retracement of this move up. We back out a little bit to a 1-year chart, a little bit larger perspective here. Let's go to a 2-year chart. You've got, I've been basically saying that gold's just going back and forth, and it really has. You look at, you just had these swings back and forth, but you've just been moving sideways for the last 2 years. And so I would, you've got some support you got some support right in here. You got some support right into here. You got resistance right into here. I don't see anything in this immediate area that would tell me it should rally from here. I would assume it's either going to come down to this area down here. I guess you have a little bit of support close to that down in here, but still that would still leave another move down. I just don't have any confidence in a gold trade. Every time I think it could rally, it rolls over and drops. It should be rallying based on the inflation we're seeing. It's supposed to be an inflation hedge, but we're not seeing any evidence of that. Now, maybe that'll happen. Maybe it'll start getting on a run here. But again, you see a couple days of a bullish reversal right here, but you're getting now a bearish candle. I don't see anything there that would give me a lot of confidence, except for maybe that the dollar is dropping. We'll look at the dollar chart here in just a second. And the dollar and commodities tend to trade in opposite directions, not all the time, but a lot of the time. Oil's getting close to breaking out, although it's down a little bit today. But you can see right here, you're right on the verge of breaking out. You've got higher lows. Now it could be that we're going to test this trend line again. Maybe we come down, test that trend line, and then break out. But I have wanted to be in some oil stocks. I might add another one here. I'm going to take a look at a couple here that I'll show you here in just a second. But that still looks like it wants to go higher. Again, the big question mark would be the dollar, and the dollar has had a big drop right here. Now, here was the previous higher high, higher low right here. So it would need to get below that low to signal that maybe we're in a trend reversal. And it doesn't necessarily have to be a downtrend. It could just be that we get into an ABC correction and then go higher. You can dip down a little bit as part of a larger correction. But it needs to get down below here, kind of similar with the bond market, where this would signal a break of that uptrend. This is looking more impulsive, though. You notice how back here, when it pulled back, it pulled back, it tried to rally, it pulled back, more choppy, more sideways. You hear me talk about that all the time, and this is critical. You understand this, the trend behavior. What is trend behavior? You tend to alternate between impulsive moves. That's a directional move. That can be up or down, but a strong move in that direction. And then corrective, where it tends to be a little bit more choppy, more sideways. The correction is like the step within the stair step. And then usually after that correction, you'll get impulsive, corrective, impulsive. Very often when you get to a trend reversal from an uptrend into a downtrend, you'll get back-to-back impulsive moves in the opposite direction. So you get impulsive up, impulsive down. And then a lot of times, too, you'll also go to a lower low. And then you'll get corrective when it tries to rally. It'll be a little bit more choppy, and then you get impulsive down. When it changes from a downtrend into an uptrend, very often you'll get impulsive down, impulsive up, and then it'll start alternating again. It's important you understand that dynamic. Again, not that these stocks follow it exactly, but they do so often that it'll really help you feel like you know what's going to happen next if you can learn to recognize that. And so what I'm seeing here is I'm seeing, you can kind of see it, that dynamic a little bit on this uptrend on the dollar. You can see impulsive. This is more choppy, more sideways, corrective. Impulsive. This is more choppy, more sideways, corrected. Then you got impulsive up, and it's looking like maybe impulsive down. What I would need to see is that, it doesn't have to go below this low. It could just start acting more choppy as it tries to rally back up. And then that could tell me that maybe the next move is going to be an impulsive move down. Maybe that move drops us to a lower low. But it's still early. And it is possible you can get a quick pullback and then take off again. Here you got a quick drop and then took off again. But this is where we pay attention. It is the dollar going into a bearish reversal. Now, why would that be significant? Well, and you got to be careful with some of these relationships. It's all about context. Sometimes when the market gets beat up and the dollar's getting beat up and the dollar's way down, people will say, well, we got to see the dollar strengthen in order for that would be bullish for the market if the dollar would start to strengthen. And the dollar starts going up, and sure enough, the market reacts to that. It starts going up. Well, this is a situation where people are saying that the dollar is too strong right now. It's hurting the economy because the dollar is so strong. Actually, what would be bullish for the market is to see the dollar start pulling back, the dollar start dropping and weakening a little bit. And so in this context, a falling dollar might be a little bit more bullish for the market. So again, it's all about context. And what I would do with that is don't get too caught up about whether a stronger dollar or weaker dollar is bullish or bearish. Usually you'll hear other people talk about it on CNBC or on financial websites. Let them be the experts in that, and especially if they're people that you kind of learn to trust, that are smart. I'm not an expert in the dollar commodity relationship to know if exactly when a stronger dollar is good or a weaker dollar is good. But I do know how to read the chart. And if I start to see the dollar trending down and the market start trending up, well, that tells me that obviously the market likes a weaker dollar right now because it's moving in the opposite direction, or it's reacting to that change in movement in the dollar. And you can do this with anything, with oil. Is high oil good or bad? Well, how's the market reaction to oil going? Right now, if oil goes higher, you usually see the market sell off because the oil price is so high that it has such a negative impact on the economy. But that dynamic will change at some point. You'll start to see oil, when oil was really beaten up, it was like if oil starts rallying, that's showing demand for oil, which is showing economic activity expanding, and that's bullish. So it's all about context. And if you're really brand new to trading and you don't understand all that yet, don't worry about understanding those relationships yet. Focus on the chart. You read the charts, you almost don't need to know the other stuff, although it helps to know some of these relationships. And I'll talk about them in these classes, especially as I see them play out. But far more important that you learn how to read a trend and read price action than understanding what the Fed decision raising interest rates how that's going to affect the economy. Who cares? Just see what the market reaction to it is, where it's trending, and that'll tell you all you need to know. All right, so we'll keep an eye on that. Like I said, this is going to be a critical area right here. And then just how we'll see what happens on Thursday. Does it continue to have that impulsive looking move, or is it trying to rally and looking a little more choppy, or does it rally strongly right back up and move higher? We'll see how that. I know there's only 2 days between now and Thursday's update, but we'll see if there's any big change there. If we how that looks during that update. the VIX. Okay, this is what's really been confusing. Look at we need to put the S&P up here. So some of the big, well, I mean, just look at yesterday. So the market was down yesterday, right? So here's where we closed on Friday. Here's where we traded yesterday. We were down compared to Friday's move. But look at the VIX, and I know this is not the VIX. It's an ETF that tracks the VIX, so the chart doesn't look the same. But look at how much we dropped. Look how much the VIX dropped with the S&P. So the S&P went down and the VIX went down. What do I always tell you? Whenever the VIX and the market are moving in the same direction, pay attention. The opposite can happen. If you follow me a long time, we had this happen last summer, I think it was. We had a situation where the market went up and the VIX went up. And what was the significance of that? Well, that tells me that the professional traders don't trust the rally, that they're buying protected puts. Why are they buying protected puts when the market's going up? Well, it's because they think that maybe that rally, that the market's getting ready to drop. They're at least starting to hedge themselves. But it's telling me, remember the VIX, the reason why we're looking at the VIX is it's telling you what is a good indication of what the professional traders are thinking. I don't care what the retail traders are thinking. They're the ones that aren't moving the market. It's these big players that are moving the market. If the big institutional traders are hedging, why are they going to hedge? Why are they going to buy those protected puts? And by the way, when they buy those protected puts, it's going to cause the implied volatility of those options to go up, which is causing the VIX to go up. That's what it's showing you. And so if they're buying those protected puts, the implied volatility is going up. So that could be a situation where you have the market go up and the VIX go up. You're like, whoa, that's bearish. That's not good. This is the opposite of that. The market's going down, the VIX going down. They're saying, okay, they're not concerned with a sell-off here. That means that maybe we can see buyers come in. Maybe they're going to start buying. Now, you could take the contrarian view of that and say, well, maybe that means that they don't need to buy protection anymore and they're not protected. And if it drops, they're going to be panic. There could be panic selling. That's possible. And that might be what happens if we roll over here and start selling off. This could be a reflection that, they're not buying more protected put. They're not rolling those out to next week or two or so. But this happened a few times. It happened right here last week where we had the market drop and the VIX drop. Now, today the market is up and the VIX is down, which is the normal relationship. But even then, look at so this is looking a little bit more like a bullish candle formation. I'm trying to see if I can find. Here's something similar to that right here, where you open lower, but you have buyers that try to push it up after a drop. So you have buyers that are pushing it up. They're still not strong enough to push it up, and it comes back down again. But it's showing you that the buyers are showing up right there. Now, this was a short-term bounce, and it rolled back over again. But this is a little bit more of a bullish candle, although. Again, you don't want to have a tail right there, but if it does come down lower into the close and look like this one back here or this one over here, right here, actually had a little bit of one right there too. That it's not the strongest bullish candle, but that's something to pay attention to. So we have the hanging man candle formation on the S&P. Let's bring that one up again. Well, we did. Now it's come back. This is looking more like just a bearish reversal candle. But remember, it was all the way back up here when we started the class. And actually, this is still looking bearish. The fact that we're dropping lower, it's still a bearish because we gapped up. Remember, we opened up here. So if we close lower than where we opened, but still higher than where we closed the day before, that's a bearish price action. So we'll have to keep an eye on that. And again, this is what happens in these updates. Sometimes within 45 minutes, that candle can change. Now, it's still a little bit of an indecision candle. You have a tail down here and a tail up here. But if we close near the lows down here, that'd be a pretty bearish price action for the day. And all that means, it's very short term. All that means is there's a pretty good chance we could at least open lower tomorrow. Maybe we open lower and it rallies back up. I don't want to draw a long-term conclusion from that that candle. I don't know. Can you expand on your question there? All it says is January 6th. I don't know what you mean by that. Can you give me some context? Anyway, so, maybe you're talking about a candle. Was it back here? Where's the 6th? No, I don't see anything there that would. Anyway, type me what you were meaning by that. All right. Chip stocks. Now, chip stocks had a pretty good day, although, again, they're right now, that's a little bit of an indecision candle. We call that a spinning top. You ever see those toys? This is actually before my generation too, so we didn't play with too many spinning tops. But those of you that are older than me maybe remember that as a toy. Kids used to spin those little tops. Oh, you could use if you saw the movie Inception, he had that spinning top that he used to see if he was in the real world or not. Good movie, by the way, if you haven't seen it. But that's an indecision candle. But again, the fact that you can see that the chip stocks participated in that rally, they should be the ones that are leading. If we are going to rally higher, we should see strength in the chip stocks. So if the chip stocks were to rally into the close and close near the highs of the day there, that would actually be a pretty bullish signal for the market. The chip stocks were looking strong. They gapped up and they finished strong. That would actually be a pretty good sign, although we could end up with conflicting signals, some bullish signals, some bearish signals. That's something you could keep an eye on there going into the close. Now, if the opposite happens, if it really slides right here, here's where we're at right now. If we slide below the open and we start looking like, so we gapped up, but we're going to close lower than where we opened, and it turns into a red candle, that'd be pretty bearish. Because if you're seeing the chip stocks do that as well, like I said, they tend to be the leadership. Hold on just a second here. All right. And then the transportation stocks, same thing. They're bouncing a little bit. They tend to be leadership for the Dow Industrial Average, the DIA, indecision candle as of right now. And again, notice indecision candle, a key support area right here. It's not looking good. And then Bitcoin. Obviously, Bitcoin's really been dropping. This is just a proxy trade for Bitcoin. We don't have a Bitcoin chart because you don't trade Bitcoin on the exchanges. But this is Grayscale is a stock that it basically trades Bitcoin. You can trade this stock as a proxy to Bitcoin. But it's trending down, and And again, this is, I talked a little bit about this last week where I mentioned that during the internet bubble of 2000, obviously the technology, that the internet was big and it was going to be huge, but not every company that came out that time was going to survive it. And I feel like the same thing is happening with Bitcoin. With cryptocurrencies. There's all these different cryptocurrencies. Not all of them are going to survive this. We're starting to see that. I can't remember the one that just basically went bankrupt. Shoot. What was the name of it? Hold on. I do have it here in another charting service. Luna. So here's Luna. And look at that drop right there. And then this is where it's flatlined right here. It's at 1 cent. It basically means it's done. It's flatlining. It's the heartbeat is gone. Well, there's going to be some of these that don't survive, and Bitcoin will, because it's the biggest, it's the most popular, it's the one everybody, it's kind of like back in the internet craze. Everyone knew Amazon was going to survive everything. It was the biggest, it was the most innovative, it was, but I think we're seeing something similar with cryptocurrencies. That's why you got to be very careful with, if you're investing in crypto, don't assume it's going to go right back up, or don't go buying in just because it's cheap. And you heard all these people that got into Bitcoin when it was $20 and now it's 20,000. It's not likely to do that again to that extent. So if you're looking at Luna and saying, man, it's only a penny, I could buy so much of that right now, and then if it goes back up to $100, I'm going to be a gazillionaire. No, Luna's dead. Luna's not going to survive. You're just throwing your money away if you're going to go buy it, try to buy it. I don't think you can buy it, but if you're trying to buy it right there, you're just throwing your money away. So some of these aren't going to survive. All right. Couple things I wanted to point out. Where, as far as, first of all, let's get into the portfolio here. Let me show you what I did. I got into CF. Now, I also got back into SARK. Now, what I did on Thursday, I told you that I was going to get out of SARK. Let's pull that one up. This is that short ETF of the ARK Innovation Fund. And remember, we had this bearish reversal candle on Thursday. So I said I was going to get out of SARK, but I was going to hang on to the SOXS. That's the short, or the inverse of the semiconductors, and we've been using that as a hedge when the market has been dropping. Well, I got out of both on Thursday because by the end of the day here, we had remember, this was trading up here, and I thought, maybe I'll hold on to that just in case we drop again. Because remember, that Thursday candle was an indecision candle a little bit. It was a little bit of a bullish reversal candle, but it was also a little bit indecisive. But I ended up getting out of both because at the end of the day, that was a pretty strong bearish reversal. And thank goodness I did, because you had the big drop in the SOXS on Friday, big drop in SARK on Friday. But then I got back into SARK yesterday. I'm not getting back in. I don't think I'm getting back into SOXS, because this is a down move, and it looks like it still could drop lower, which means chip stocks maybe are rallying a little bit right now. Look at the SMH, see if it's rallied up a little bit since we've been talking. Yeah, a little bit, yeah. So that's changed now to where it's not as indecisive. If it closes up here, that'd be pretty bullish. So remember, I don't want to be in these ones if I expect the market to go up. I got back into SARK on yesterday because you had this drop, but then we had a bullish inside day right here. So you have the bearish candle from Friday. We had a bullish one inside that. Typically, you get a rally off of that. Not always. It's not the strongest bullish price action. And, today we're kind of trading in that same range. We haven't really gone anywhere, but we're still within the candle from Friday. So, I don't know. I may hang on to this just as a hedge. I do have a stop down below here in case it drops again. And again, if the market rallies, this will drop most likely. And so I'll have to see how the market looks at the end of the day there and what I might do with that. But we're not really, if you've noticed now with the whole update, the bottom line with everything is that we're at a spot where we could go either way in the near term. I still would say we're still overall in a downtrend, and I think ultimately we should end up still going lower, but in the very near term, it could bounce. It could still go higher a little bit, or it could roll over. We're getting a lot of indecision and a lot of mixed signals today, so that might be a reason to go ahead and hang on to this to hedge us a little bit in case we do drop. Let me pull in the portfolio here. NOC is still moving higher. My stop was down below here, so it's still, now if it can break out above here, it's really going to rip. I don't know when that's going to happen, but again, we're still in this one. It's still doing okay. USO had a nice move the last couple of days. So since last Thursday, we were right in here on Thursday. Friday we went up. Monday we went up. Today we're reversing that a little bit, and we are bumping into that resistance. But I think my stop's down below here, so there's no reason to, just maybe we do continue to move sideways a little bit. Ultimately, though, I think we're going higher, so I want to have this trade. CIX, this is the coal play, still moving up higher, still looks fine. And the SARC. And then I added CF. I told you I wanted to get into this one, and it went to a buy signal yesterday. I've got my stop down below here. Hoping this was the correction and that we're going to end up breaking out of this. Again, this is a fertilizer stock. I talked about the whole, again, the bottom line is the chart looks like it could go higher, but if you've been following the news, there's a big wheat epidemic because Ukraine was, like the fourth largest wheat producer in the world, and so there's got to make up for it. There's farmers scrambling to make up for that demand, and they're going to need fertilizer to do it. So it's making these companies pretty valuable. They've already reacted to it. Obviously, Ukraine war in February, you can see the big initial run up in the fertilizer stocks. Had a correction. It looks like they can start to go again, and that's kind of what I'm trading on this one. And again, I've got my stop down below here, so that's where I know I'm wrong. So if we come right back down and get down below here, then I was wrong on that, and that's what I'm willing to risk. I'm running out of time here, but I did want to go over, instead of going into the normal sectors, although there is something I did want to point out. Maybe I'll point that out on Thursday. Because what I want to do to try to find a trade is to show you how you can use your screener as well and kind of screen for your own. Obviously, the point of going into the sector tab here is you're trying to look for the strongest sectors. So this is going to rank them by the strongest sectors. Oil is the strongest. And you're looking in those sectors for the strongest stocks within those sectors. There's another route you can go to try to find trades. You can go into the screener and kind of play around with it a little bit. So if you go under screener, I'm going to click right here on stock screener right here to bring up the criteria where you could put in the criteria. Like I said, there's no perfect scan, but here's something that I will typically look at. I don't like to have too many criteria in a scan because if you have too many criteria, you're not going to find it's not going to give you many stocks. You might get one or two stocks, and that doesn't mean that those stocks are guaranteed to work because they met all your criteria. So it depends on what's important. There's different categories. If there's something that's really important to you and what you want to scan for, then include it. But I try to keep it down a little bit. For share price, I want to have it at least be a $10 stock. Usually when stocks are below $10, it's not a good thing. I know a lot of you look for cheap stocks out there, but just remember that if a stock is below $10, it's usually not good. It usually doesn't mean it's a good company. Yes, you'll find some that are starting out at $2 stocks and they're going to eventually be $200 stocks. But the vast majority that are below $10 are usually stocks that just aren't making it, or they would be above $10. It's just logic thinking. So I want to set that as a minimum. Then I want to come down here, and I'm just going to make it real basic. I want to look for a signal change from hold to buy, because that's what we've been looking at. We're looking for stocks that have pulled back. Usually, when it goes from hold to buy, you can find those stocks that have pulled back. So they pulled back and they've gone back from a buy back to a hold, and maybe they've chopped back and forth, created that ABC pattern, and then they're going back from hold to buy. Sometimes you can find those coming out of those corrections. You could also add in there, as part of that, a short-term trend from changing from down to up. That can often, short-term trend is very short-term. So an ABC pattern could get that short-term trend to go down, and then now it's going back up again. It might find some stocks that are coming out of a correction. We'll see if that's not giving us enough trades, then we could cut that one out, but we'll leave that in there for now. And then strength rank, I want to look for high strength rank stocks. I prefer 98 and above, but to give us maybe a good group of stocks to consider, maybe drop that down to 95. That's still a pretty good strength rank. And then hit find stocks. So this one only gave us 2. So that's too small. Let me go back and take out that short-term trend from down to up, and then hit find stocks again. Okay, this is a little bit better list. There's 21 stocks. Now you can see a lot of these are oil companies. They're CF, so that one made our cut. That's a 98 strength rank. Marathon, we've traded Marathon recently. We're in CIX. Now, like I said, I wanted to add another oil stock. There's a couple of big ones down there, Chevron and Exxon Mobil. They're in there. They have high strength ranks. They're big companies. So let's look at Chevron. And this is very similar to what the USO chart is showing. It's been consolidating through here. If this breaks out, it's going to take off. And now, who's to say it can't come back down? And then, it looked like it was going to break out here. It came back down. Looked like it could start breaking out here. It came back down. Eventually, it's going to break out. It should break out. Let's look at Exxon Mobil. That's kind of the same thing. It's right at that breakout area. Now, we could wait for the breakout. I'm gonna go back to Chevron. I think I want to get into Chevron. Now I could wait, and maybe I would. I don't know. Sometimes when it finally does break out, it makes such a big move that I'm gonna go ahead and get in it, because if it breaks down below here, that something's wrong, and we'll put our stop down below here. I don't mind if it bounces around a little bit within that range. So let me get my stop. I'll get it down below. Usually I like the extremes, but there's so much right along here. I don't need to have it much lower than that. Let me just take one of these days right here. What was the low of that day? 154.52. So I'm just going to do 150. We'll just make it 154 as a round number there. Add to port. So I clicked on this little blue plus sign to bring up the portfolio, to add it to the portfolio. I'm going to add it to the stock specific class. Put my stop in at 154. Let's see what 100 shares. Okay, 100 shares is too much. We'd have 17,000. I try to keep this around. I'm trying to keep this around 7,000 to 9,000 in the trade right now. So if we probably drop that down to 50 shares, probably close to that. There's 8,000. Yeah. And I also want to make sure the portfolio at risk is between usually about 1 to 1.5%. We're just under 1%, so that's good. That means if I'm wrong, I'm looking to only lose about $1,000 if I'm wrong, which is about 1% of the entire portfolio. I want to keep that risk manageable. So let's go ahead and purchase. Now, again, we're not in the most bullish conditions, and one of these trades is a hedge. But I want to stay right now. I still want to have a majority of cash. We're at 62,000 in cash. Just not strong enough bullish conditions to get more aggressive than that. But notice what we're doing. We're staying in the sectors that are outperforming right now. Aerospace with Northrop, a lot of oil, USO, coal stocks, EIX, but the stronger oil stocks and coal stocks. CF is a fertilizer. So we've got a good, we're heavily in oil right now, but we probably should, with the fact that that's trending up despite the market trending down. So, all right. That's all I have for today. I know I went pretty over time today, but there's a lot to talk about. Take one last peek at SPY. So it's rallied back up again, but it's kind of showing that hanging man candle formation, which again, it's not the strongest bearish formation, but it's not the most ideal. We're still at a point where it's acting like we could go either way right here. Hopefully have a better idea on Thursday with Thursday's class. All right, that's it. Have a great week. We'll see you on Thursday for the stock specific class. Bye now.